is a presentation of TFNN. Live at TFNN, here's Breakout Investing with your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing. My name is Ken Shreve. Just a reminder, my show airs every Tuesday and Thursday on TFNN from 3 to 4 p.m. Eastern. You can also find me on Channel 1 on Tiger TV at TFNN.com. You can pick the show up on iTunes. Just do a search for Ken Shreve, and you can listen to the podcast at your leisure. Or, of course, you can listen live on your smartphone at tfnn.mobi. Give me a call, folks. The number to use to get through is 877-927-6648. It's Tuesday. That means another weekly update of my Ultimate Growth Stocks newsletter came out earlier today. I publish every Tuesday, and I do send out email buy alerts, sell alerts, and market updates in between. So again, my newsletter launched about a month and a half ago at tfnn.com. You can find me right in the carousel on the homepage, or you can click on the newsletters tab at the top of the page, click on newsletters, then investment newsletters, and then you'll see Ultimate Growth Stocks. You can get a 2-week trial and get familiar with my growth stock methodology. So let's check and see where we're at in the markets here. Nice to see a good, strong up day for the markets. The Dow is up currently 165 points, 1.4% to 12,118. The NASDAQ outperforming slightly, up 44 points. That's 1.7% to 2683. And the S&P 500 also having a good day, up 19.5 points or so. That's 1.5% to 1291. The good thing, hey, we're getting stronger, it seems, as the day progresses. I was looking at pre-market futures last night. They seem to be getting stronger. They weren't as strong as this, so it has definitely shaped up to be a very strong day today. Of course, anytime you get a good, strong up day for the market, you like to see a good volume push behind the gains, and unfortunately, this is starting to become a very stale story where we tend to see volume behind the declines and pretty much a lack of conviction behind upside gains, and that is the case again today. NASDAQ volume looks like it's on pace to be about 10% lower than what we saw on Monday. NASDAQ volume on Monday totaled just over 1.8 billion shares. Again, average volume on the NASDAQ these days is right around 1.9 billion. So not much volume behind the NASDAQ's move today. NYSE volume also tracking 5-10% lower than Monday, and volume on the New York Stock Exchange Monday came in at just over 900 million shares. So not much conviction behind the buying today. Again, we're still in the very early stages of a rally attempt here. The gains are good to see. There's still a lot of technical damage out there among leading stocks. We're going to go over some of the big gainers in a little bit, but when you look at all the stocks today that are outperforming the market materially, there's just no volume behind the moves. A lot of them are stuck below their 50-day moving averages. They've undergone a lot of technical damage recently. So, for day traders, this is a market where there are opportunities for sure. But for people like me that are looking for stocks breaking out of consolidation areas, there have been a few opportunities here and there, but really more concerned about the technical damage in the market currently. So we'll get a lot of gainers today. Not much volume behind the move. I wanted to take a look at a chart of the NASDAQ. Again, you can watch with me here on Channel 1 at Tiger TV. I have charts, so I'm talking about charts. You can see what I'm looking at. But this is very interesting what is going on in the market right now. We had a rally attempt yesterday for the Dow and the S&P 500. They both closed higher, not by much. They were just fractionally higher. The NASDAQ actually ended lower on Monday. So what you have today is, a big, strong percentage gain for the NASDAQ, but it's only day one of a rally attempt for the NASDAQ. Technically, it's day two of a rally attempt for the Dow and the S&P 500. But if you look back on the NASDAQ in mid-February, this is where the first pullback in the market started. The NASDAQ came down about 8% in 1 month's time, from mid-February to mid-March. And then what happened on March 24th, you saw a good solid follow-through day on the NASDAQ. It was on March 24th. It was a 1.4% gain, but it did launch a decent little rally. A little bit of selling came into the market, and then the NASDAQ continued higher. But from its bottom, the NASDAQ rallied about 10% after correcting 8%. Well, this time around in early May, the NASDAQ came down all the way down to its 200-day moving average. From its high, intraday high, to its intraday low, it was a correction of more than 9%. So it's not out of the question that we can see a tradable rally here. I'm not ruling that out. Again, there's technical damage that probably needs to be fixed a little further in this market, but I'm not ruling out the possibility of some sort of follow-through day again for the NASDAQ. Now, today being day one of a rally attempt, what happens on day two and day three really doesn't matter. So really not interested in what happens tomorrow, Wednesday, or Thursday, but you want to look for a big percentage gain on Friday or sometime next week. A percentage gain of preferably 2% or higher. You want to see a little volume behind that move, and then that would give me a better idea that this market rally could have some legs. But right now, just day one of a rally attempt for the NASDAQ. It's nice to see stocks going up. That's a good thing. It's been a tough few weeks for sure. A lot of selling in the market, so we will take the gains for today. Economic news earlier today. There were quite a bit of headlines. There were some headlines in China, and economic data from China showed a slight cooling of industrial activity. Inflation indicators ticked higher in China, but within expectations. China's central bank raised reserve rate requirements for its lenders to combat inflation, the 9th time it's done that since October. On the U.S. home front, we had May retail sales. Now, the reason for the market weakness headed into this week, there's probably a lot of apprehension about some of the economic data that we were going to see this week, starting with retail sales today, inflation data as well. But the retail sales came in much better than what economists were expecting. They still fell, but not as much as expected. May retail sales fell 0.2%. But again, that was much better than the 0.7% decline that economists were expecting. Excluding autos, sales rose 0.3%. That was also slightly above expectations for a 0.2% gain. Separately, the Labor Department said the producer price index rose 0.1% in May, while the core rate, excluding food and energy prices, rose 0.2%. You hear the Fed talk recently. They are not overly concerned about inflation at this point. Some pundits think they should be, but when you see data like this, at least the way it's calculated, inflation does not seem to be a concern for the Fed, and the numbers really don't show it either. Also, interesting news today, the economists from the Economic Advisory Committee of the American Bankers Association, they came out with some writing today. They believe that the Fed won't raise interest rates until the middle of 2012. Probably not a big surprise there. Remember, it wasn't too long ago, 2-3 months ago, where there seemed to be increasing chatter that that the interest rates may go up before the end of the year if economic data continue to improve. And at this point, it's highly unlikely that the Fed is going to raise interest rates before the end of this year, judging by recent economic data that we've seen. So probably not earth-shattering news here from economists that the Fed won't raise rates until the middle of 2012. Their belief is that core inflation will moderate somewhat during the second half of 2011 before starting to slowly rise again next year. The next Federal Open Market Committee meeting is on June 21st and June 22nd. So we'll see what they have to say at that meeting. Let's take a look at the GLD. Take a look at see what gold did today. Gold ended up 0.6% to $1524.40 an ounce. Take a look at the Spider Gold Trust, and you can see that's currently up about 0.5% to 148.56, trying to make a convincing case that it's going to find support at its 50-day moving average. As you can see, an area where it has found support in the past. Take a look at silver as well. I don't have an official close on silver, but we can take a look at the iShares Silver Trust. And we've mentioned before that the technical picture of gold looks a lot better than silver. Silver got very crowded very quickly, corrected sharply. You can see it's stuck below its 50-day moving average where it's been for several weeks. The SLV was outperforming gold today. We should note it's up 2.2% to 34.63, but still far below its 50-day moving average, which is currently just over 38. Oil up 2.1% to 99.37 a barrel, and stocks also getting a lift today because the dollar is weak. We'll take a look at the power shares. Deutsche Bank U.S. Dollar Index Bullish Fund. This is a popular ETF that basically tracks the U.S. dollar index. You can see the UUP is down 0.3% to 21.23. It's been below its 50-day moving average for weeks and weeks and weeks, and recently, between May and June, tried to reclaim the 50-day moving average. Now it's back underneath it, and it looks like that could be a pretty significant layer of resistance in the near term. So the UUP is working on a two-session winning streak. Again, down 0.3% currently to 21.23. In earnings news, let's take a look at Best Buy. Let's call Best Buy a troubled retailer at this point, but the stock is having a pretty good day today. Expectations were very low. This is a company that really has not delivered the goods in recent quarters, but the stock is having a good day today, up nearly 5% to $30.23, trading in the bottom half of its trading range, as you can see. So there still are some sellers in the stock today, but it is off its session highs. Best Buy reported first quarter results that beat analyst forecast. Quarterly profit fell 3% from a year ago to 35 cents a share, while sales rose 1% to $10.9 billion. The company reaffirmed its full-year earnings forecast and said revenue would come in at the high end of the $51 billion to $52.5 billion range it had been expecting. So that is Best Buy. We can also take a look at another earnings report today, a disappointing earnings report. This is a company that actually has a pretty good track record of growth, and it's a company called FactSet Research Systems. Take a look at FactSet. Shares taking a hit today. Down 4.5% to 99.61. It gapped down. There are some buyers in the stock today. It is near its session high, so the stock is well off its session low of 97.06. Again, currently trading around 99.61. It gapped down, still above its 200-day moving average. FactSet Research Systems. It's a financial data provider. They reported earnings of 92 cents a share, up 14% from a year ago. Revenue increased 14.6% to $183.6 million. When we come back, there's a lot of headlines around Apple today. The stock is outperforming nicely. A whole slew of headlines around Apple. So we'll talk about Apple when we get back, and we'll be right back, folks.
Tiger University's Tiger Trading Tracks is your blueprint to building a solid foundation of comprehensive trading tools. An in-depth educational program, Tiger Trading Tracks features a step-by-step process for understanding the markets and creating success strategies for your trading. The Tiger Trading Track journey will prepare you to adapt and develop a personal trading and investing strategy that will perform best for you. While you can't control the markets you trade, a Tiger Trading Tracks education will allow you to understand your personal trading and investing needs and what markets are best suited for you. Now is the time for you to travel your path to financial independence. Follow your Tiger Trading Track to trading and investment success. Go to tigeruniversity.com and click on Tiger Trading Track in the navigation bar. Choose the course that most interests you and begin your education today.
Direction Shares leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leveraged investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Okay, welcome back, folks, to Breakout Investing with Ken Shreve. We've got a little more than a half an hour to go in the markets today, and again, it's a good day taking shape, no doubt about it. Dow is currently up 1.3%, Nasdaq up 1.6%, and the S&P 500 up 1.5%. The bottom line is that this market is going to have to do a lot more, frankly, to prove to me that it's ready to start some sort of meaningful uptrend from here. I'm open to it. I will embrace it if it happens, but I do know that there's a lot of technical damage out there, and the institutional selling that's been seen in the market since early May, I just think it may need a little more time to work its way out. But that said, you can't argue with the technical picture of the Nasdaq. It came down to its 200-day moving average yesterday. Nice bounce off the line today. And again, when you look at the Nasdaq's pullback between mid-February and mid-March, as I pointed out earlier, it came down about 8%. Then eventually rallied 10% off its lows. Nasdaq came down to support yesterday, a correction of a little more than 9%. And today is day one of a rally attempt, so we'll look for an additional sign of strength in the Nasdaq in coming days. And just at this point, it's really hard when there's no volume anywhere, when there's no volume in leading stocks that are outperforming today, and no volume in the market at all. It's very difficult to glean direction. That's the bottom line, and the lack of volume in the market has been a story out there for a while. So it just would be nice to see some signs of institutional buying in this market sooner rather than later, because if we keep moving higher in low volume, it just doesn't make for a good foundation. Before we went to break, wanted to mention Apple. This is a classic example of a stock that is outperforming a little bit today. Shares were recently up 1.9% to 332.87. Looking at a daily chart of Apple here, and I mean the chart looks similar to the Nasdaq, really. I mean, it came down to its 200-day moving average yesterday, closed slightly higher. Shares gapped up today, so it's trying to improve its technical health, but it's still a damaged stock. Now, a lot of headlines around Apple today. The first, that Nokia agreed to settle all patent litigation with Apple. Nokia obviously has really been hit hard in recent months. It's struggled to stay competitive in the smartphone market. The agreement that was reached basically consists of a one-time payment that Apple is going to make to Nokia, and then Apple's also going to pay ongoing royalties for the term of the agreement. So terms weren't disclosed. Shares, as this is good news for Nokia. It should benefit its earnings going forward, or at least margins. Shares of Nokia were recently trading around $6.30. We'll take a look at Nokia and see where we're at here. Nokia up just over 3% now to $6.30. Again, very, very damaged, and the stock is, despite the good news today, is trading near its session low again, around $6.30. Another headline around Apple today. Apple executive Ron Johnson was named the new CEO at J.C. Penney. Interesting news there. Johnson has served for the past 11 years as senior VP of retail at Apple. J.C. Penney having a very big day on this news. Shares are up, recently trading up 16% to 35.07. And finally, interesting news from Apple today. The company has started selling unlocked iPhones in the U.S. for the first time. An unlocked iPhone basically allows users to switch carriers to a limited extent and save money when traveling. The phones go for $649. There's a higher memory model available for $749. So that's a look at Apple. A lot of headlines around that stock today. Again, stock normally trades about 15 million shares a day. About a half an hour to go in the session, it was trading around 9.5 million shares. So it'll be lucky to get up to its average daily volume today. Not a whole lot of conviction behind the buying in Apple. Let's take a look at some other gainers today. I wanted to take a look at Danaher. That's ticker DHR. Danaher is having a good day. Shares up 1.8% to 52.27. The stock has fallen about 7.5% from its recent high. On Monday, Danaher announced an offering of 17.5 million shares to help pay for its recent acquisition of biomedical testing equipment maker Beckman Coulter. And also wanted to take a look at SolarWinds real quick. Give credit to David Chung over at IBD for talking about this stock on Friday. SolarWinds is a maker of network management software. Good, strong breakout here. This is, you hear me talk about stocks forming bases. This is a good base, good breakout from a consolidation. Broke out over $24.95, so good day for SolarWinds. We'll be right back, folks.
Timing the Trade Charts is a complete charting software package that brings together all the tools that you need to analyze stocks using Tom O'Brien's Timing the Trade methodology in one easy-to-use application. For the low yearly rate of $449, Timing the Trade Charts automatically computes swing points, ABCs, Fibonacci retracement levels, confluence, gaps, and much more. Timing the Trade Charts is now available at tfnn.com, and you can download it and try it risk-free for 7 days. We're so confident that you'll love this this new charting software package that we're offering a 30-day, no questions asked, money-back guarantee. If you're not completely satisfied with this software, just let us know within 30 days and you'll get a complete refund. In order to take advantage of this great offer, log on to tfnn.com and click on the Timing the Trade Charts banner or call our office at 877-518-9190. That's 877-518-9190.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway. Starting Tuesday, June 21st through Labor Day, TFNN will hold a drawing once a day, 5 days a week, business days only. One lucky entrant will receive one of these beautiful coins. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks. Go to the front page of TFNN.com for more information. Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
Okay, welcome back, folks, to Breakout Investing with Ken Shreve. Right before we went to break, I mentioned the good, strong technical breakout in SolarWinds, a small-cap company that makes network management software. So again, SolarWinds has a market cap of $1.9 billion, average daily volume close to 600,000 shares. But this is just a good example of what a good base looks like. You can see SolarWinds started consolidating gains in mid to late April, and then it came down, started to retest its former high, and then has been moving sideways over the past couple of weeks. So you have a good swing point here, a good entry point. Let's see, that was at 24.95, which would be the high in this area right here. So just a an example of a good solid base and a good solid breakout, and in addition, a company with good fundamentals, steady top line and bottom line growth in recent quarters. Return on equity is also very high here at 42%. So you never want to chase a stock when it moves more than 5% past a buy point, so you can calculate whatever 5% is over 24.95. It's probably too late after that, but in a breakout like this, ideal price action is for the stock to eventually start to move sideways, consolidate gains in tight trading. That would tell you that there's good support out there despite the price gain after the breakout. So that would be ideal price action, just tight sideways trading after today. We took a look at Danaher. Let's also take a look at Precision Cast Parts. This is ticker PCP on the New York Stock Exchange. This stock is also having a good day today, up 3.4%, outperforming the broad market to 153.34. You can see the stock has jumped back above its 50-day moving average. Precision Cast Parts is what I would call an institutional quality stock. It's a supplier of metal parts for aircraft engines and power plant turbines. Stock's having a good day today. Earlier today, the company said it will acquire a rings operation from GE's aviation unit. The GE unit, Trueform, makes flash welded and cold rolled rings used in jet engines and gas turbines. Precision Cast Parts said that this deal will be immediately accretive to earnings, so shareholders are happy about that. Again, shares up 3.4% to 153.34. Let's get a quick quote on a retailer that I've talked about lately. It's continuing to outperform the market. Ulta, salon, cosmetics, and fragrance. Earlier this month, the company reported really strong earnings, and when it comes to execution, I mean, this is one of the top retailers out there. They're managing their expansion smartly. They've got good growth in recent quarters, fundamentally very strong across all metrics. Stock is up another 2.6% today to 59.26. What I'm going to do is move over and take a look at a weekly chart for Ulta, salon, cosmetics, and fragrance, and just tell you the kind of the main issue I have with the stock right now. I mean, obviously the fundamentals are there, the relative price performance in there, but again, this is a stock that has made just such a tremendous price move in recent years. You have to wonder, has the big money already been made? And when I see a weekly chart like this that just is up and up and up, and you can see the good support at the 10-week moving average, really hasn't done anything wrong technically. I'm hesitant to look at the stock up here and think that it's still buyable. Now, if the broad market starts to pull back again, and the recent correction goes from say 9, 10 to maybe 12% off the recent highs for the Nasdaq, you could see a good base form here. It could digest its gains for a period of time, and then maybe you'd see a better entry point for Ulta. But I'm just cautious on the stock here, not because it is a great company and the stock has been a monster performer, but you have to look at where a stock's been, and in this case, it just looks to me like the big money has already been made. So that's Ulta, salon, cosmetics, and fragrance. All right, folks, when we come back, we'll take a look at some more gainers today. Don't forget to get a free trial to Ultimate Growth Stocks, my new newsletter, right on the homepage of tfnn.com. We'll be right back.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to tfnn.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back to Breakout Investing with Ken Shreve. Appreciate you listening. Also wanted to take a look at Accenture, and I've mentioned in the past that for my Ultimate Growth Stocks model portfolio, I don't discriminate, large cap stocks. I will look at small cap, mid cap, and large cap stocks for my model portfolio. And Accenture is a good example of a large cap with a lot of qualities that I like to see. It has a market cap right around $37 billion, so it's a very large company, but technically it looks very strong right now. We've talked about the fact that there's really not much volume in the market today. NASDAQ and New York Stock Exchange volume is probably going to come in much lighter than Monday's levels, and a lot of the high beta growth stocks that I tend to target for Ultimate Growth Stocks have been moving higher, but there hasn't been much volume. Now, that's not true with Accenture. Accenture, again, large cap stock, there's a good push in volume in the stock today. It's outperforming up 2.5% to 57.32, and I really like the look of this stock fundamentally and technically, seeing good sequential sales acceleration in recent quarters. When you look at recent earnings and sales growth, earnings growth has accelerated as well. Return on equity very, very high at 63%. Good growth prospects. The stock is under accumulation, and it's also looks to me like it could be in the process of trying to break out. So Accenture looks strong here. You can see tight sideways trading for 6 or 7 weeks. There are a couple of areas of resistance in its chart, one at 57.75 and one at 58.20, but good volume push in the stock today, I think, brings the possibility of an ultimate breakout over 58.20 into play here. So not only do you have a stock that's strong technically, but you also have a pristine balance sheet and a company, in my opinion, that is well positioned for growth. So that's a quick look at Accenture. I wanted to take a look at some of these higher beta names, some of the fast-growing, innovative companies that I tend to look at. My screens, when I run my growth screens, they tend to be stocks that show good sequential earnings growth in recent quarters. They typically have a good track record of annual earnings growth as well. So I wanted to take a look at a couple of companies here. The first is Carbo Ceramics. This is a a stock that really took a hit Monday. The stock fell below its 50-day moving average. There was volume behind the move, and the stock has rebounded nicely today, up 4% to 145.30. Not much volume at all behind the move, and you can see it fell below its 50-day moving average and is currently right at its 50-day line now. And I'm looking at a chart here where you can see a descending trend line that I drew from that's connecting its recent highs, and you see that Carbo Ceramics, for it to really start a new technical uptrend, is probably going to have to get up to the 150 area before it would make a pretty good case that its trend has turned upward. So bad day for the stock yesterday, good day today. The stock is outperforming, up 4%, but no volume behind the move. This is another stock that is frankly tough to trust right now. Also wanted to take a look at Intuitive Surgical. That's ISRG on the NASDAQ. This at one point, it was just a huge growth story going on here. Growth has slowed a little bit, but I still view it as a pretty good company. They make the Da Vinci robotic surgical system. Again, a stock that is a bit troubled technically. It broke below its 50-day moving average about 3 weeks ago. It's still below the line. Stock is up 1.5% today to 346.06. So it's an expensive stock price-wise, but just another example of sort of a higher beta stock in the market that's having a good day today, but technically it's still troubled below its 50-day moving average. We'll take a look at MasterCard, another stock that was nicely higher today at one point. Let's check and see how it's doing now. Shares of MasterCard also outperforming, up 2.5% to 273.98. You can see a kind of a similar chart to Carbo Ceramics. It's kind of showed some wild price action of late. It is working on a 2-session winning streak, but again, it fell below its 50-day moving average. Now it's back up, trading right at that price level, which could turn out to be a resistance level. So a lot of stocks like Carbo Ceramics, MasterCard, and there are plenty of others out there today as well that are enjoying nice price gains. What about a stock like Chipotle Mexican Grill, one of my favorite restaurant stocks, a very well-run company? You see there's sort of a common theme here. A lot of technical damage. Chipotle up 2.2% today to 276.84. Again, fell below its 50-day. It's trading right at the 50-day line now. So these stocks have a lot more work to do to prove to me that the uptrend is for real. Okay, let's move on to, wanted to take a look at Priceline as well, because this is a stock that was underperforming today. And not only is it underperforming today, but it's really just looking kind of toppy to me. I mean, it really has come off hard off its highs. The stock is down another 0.2% today, down $1.16 to 480.97. People are going to continue to talk about strong fundamentals at Priceline, but there are big-time sellers in this stock, and I'm not really sure what the message is there. But while a lot of fast-growing companies are rallying with the market today, sellers are still in Priceline, and shares only down about 0.2% to 480.97. But this is frankly another broken stock in the market. It's still holding above its 200-day moving average. It could put in a bottom shortly and start to make its way higher, and over time maybe retest its prior high around 550, 560. But that's a long ways from its current price level. So this is a stock that I'm not interested in owning right now. I did well with Priceline. This is a stock that I actually sold not too long ago for my model portfolio, but just not interested in owning it right now. Okay, folks, I mentioned Ultimate Growth Stocks, the trial on the homepage of TFNN.com. I target fundamentally and technically healthy stocks. My model portfolio, when I started with TFNN, had about 16 stocks in it. I have about 6 or 7 in there now because I've been raising cash, sort of getting out of the market's way, and I initiated a new position today in a stock that I think has potential, but still kind of keeping my powder dry here. I want to see, it's not really clear to me which way this market wants to go yet. So we'll be right back, folks.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Vista Gold. For more information, just click the Vista Gold banner on the front page of TFNN.com.
Okay, welcome back, folks. Ken Shreve with you. Breakout Investing with Ken Shreve. Let's take a quick look and see where we're at here with the markets. A little more than 5 minutes to go in the session. The Dow is off its highs now, up 130 points, 1.1% to 12,080. NASDAQ still hanging in there, up 1.4% to 2678. And the S&P 500 up nearly 15 points, 1.2% to 1286. Wanted to take a quick look at Zoll Medical. It's probably a name that many of you have not heard of. It has a market cap of $1.3 billion. Not the most liquid of stocks, with an average daily volume of right around 215,000 shares, thereabouts. But I bring it to your attention because it is a stock fundamentally and technically that has a lot of positive qualities, and it is the type of stock that I target for my Ultimate Growth Stocks model portfolio. Good fundamentals, good record of growth, and constructive price and volume trends in the chart. Shares of Zoll are up about 1.7% today to 57.89. Not much volume in the stock. But not much volume in the market today. Zoll is based in Massachusetts. It makes cardiac resuscitation products for the treatment of cardiac arrest, things like that. Good bottom line and top line growth in recent quarters. I like the fact that after its big gap up in April, it has moved sideways, held on to a lot of its gains. It's still holding above its 50-day moving average during a time when many stocks are below their 50-day lines. And this is another example of a stock, and you'll hear me say this a lot. I mean, it's a high multiple stock. It sells at 56 times trailing earnings and 33 times forward earnings. But let's look and see how this company is expected to grow this year and next. They earned 87 cents a share in 2010. In 2011, full-year profit is expected to come in at $1.27. So $1.27 versus 87, that's 46% growth. In 2012, they're expected to earn $1.76. Compared to $1.27, that's 39% growth. So I think this stock is arguably still cheap, and estimates may be low here. But again, it's a more speculative stock, market cap of $1.3 billion. But I like strong fundamentals. I like strong technicals. Zoll Medical has it, and there are several stocks out there that I wrote about earlier today in my weekly update. There are probably 6 or 7 names on my watch list right now that could very well get bigger in coming days and weeks. Hopefully, this market is going to right itself soon, and at the very least, let's hope we can get a nice little tradable rally. Coming up tomorrow, in terms of economic data, the CPI, Consumer Price Index, is expected to rise 0.1%, with the core rate also up 0.1%. So again, this inflation data that we're seeing on a monthly basis really not raising red flags, even though, of course, prices are high in terms of food and energy and the like. We also have industrial production and capacity utilization data that will also be out. Don't forget, later this week, I don't know the day, it'll either be Wednesday, Thursday, or Friday, but Pandora Media is going to list on the New York Stock Exchange under the ticker symbol P. Company plans to raise $162 million by offering 14.7 million shares at a price range of $10 to $12 a share. The company had previously filed to offer 13.7 million shares at a range of 7 to 9. So demand could be strong for Pandora Media. That's going to trade under the ticker P. Also this week, Bankrate, a publisher, aggregator, and distributor of online personal finance content. That's going to trade under the ticker RATE. They plan to raise $300 million by offering 20 million shares at a price range of 14 to 16. Bankrate did about $366 million in sales over the last 12 months. So, all right, folks, day one of a rally attempt for the NASDAQ. Let's hope it goes somewhere. My next show is Thursday, 3 to 4 p.m. Eastern. Don't forget to check out a free trial to Ultimate Growth Stocks right on the homepage of TFNN. We'll talk to you again on Thursday.